This is Colin Cattell with Palisade Radio, and on the line today is Pat DiCapo, Managing Director of Power One Capital Markets. For any of our listeners that don't know, Pat has a highly successful investment background. Casey Research has placed him as the number one on the Casey Next 10 list of most successful resource industry titans. Pat, thanks so much for joining us.
Thank you, Colin. Pleasure to be on.
Pat, your track record for success includes Aurelian Resources, Petrolifera Petroleum, Continental Gold, Colossus Minerals, Azimuth Resources, and Oryx Gold, to name just a few. It seems you have a real knack for identifying the right companies and getting behind great management. Could you tell our listeners what you look for in a company before writing a check?
Sure. Well, essentially, at Power One, we are really in the discovery investing element of the resource sector, which is really the highest risk, highest reward element. And there's a number of qualities that we look for when we write a check. It starts with management. You want to make sure that management understands the resource game, is qualified, is competent, and also has a track record. You want to make sure you're in the right jurisdiction because the world is becoming an interesting place very quickly, and there's numerous jurisdictions that you really don't want to participate in on the resource game with essentially all the nationalization that's occurring. And from a capital market perspective, because we are in the discovery element of the resource sector, you want to make sure that share capital structures are effective, so that if there is a discovery, you have the highest reward in your investing dollars. So really, we try to protect our downside. We try to invest in those companies that have these qualities. We try to structure transactions where there's a warrant involved, so that if you do have a discovery, and not only do you make money on your initial investment, but you also have a warrant that gives you essentially double the upside. And those are really some of the qualities that we look for when we write a check in these companies.
You just mentioned jurisdictions. Are there any jurisdictions you will absolutely not look at right now, or do you just make sure to price that into your valuation based on risk?
There are a number of jurisdictions that we avoid, but it really becomes country specific. And obviously it changes with what's happening in the world. You never really want to count out a jurisdiction in totality. There are jurisdictions where governments change. So when the asset is world class and you have a patient long-term philosophy, and the risk reward element is there, and your entry level is so low that you're willing to take a 5 or 10 year horizon that the politics of a country can change, you price that into your factor. So although you do avoid certain jurisdictions at different times, it does become a situation where if the price is right and you have a long-term horizon, you'll take the risk for that jurisdiction.
Depending on what metric you look at, the resource market has been in a downtrend for the past 18 to 24 months. How much longer can we expect the market to remain in a downtrend? Do you think the venture is pretty well cleared out at this point, or do we need to see more companies delist?
On the venture, we are in a bottoming out phase. I think that there are many companies that have run out of cash. So we will see over the course of the next 6 months to a year, many companies consolidate, many companies will delist, and the ones that don't have any assets to speak of will essentially go out and disappear. However, in the mix of all the venture exchange companies, there are many assets that are severely discounted. So, I wouldn't want to pick a specific time frame or a specific high watermark of where we're at right now. But I believe that in this bottoming out phase, there are tremendous opportunities for discovery investors, and we just have to basically go through this phase. Try to find the value in some of these companies because there is tremendous value in those. And again, go back to structuring the types of financings that will give you the most upside while protecting your downside. And try to find those quality management teams that still exist, assets that are in the right jurisdictions with the right share capital structure. and put the money to work in those types of opportunities.
So, looking at particular sectors or jurisdictions right now, and without pointing to any particular company per se, is there anywhere or any sector that really excites you at this exact moment?
We remain very excited about what's happening in the gold market. Although obviously gold has retracted significantly, we can't pick bottoms, but on selective names where quality management exists, high grade, world class assets, the right types of companies that are fully funded. We continue to think that at any point, if you buy those types of assets, you will win at the end of the day, because the quality will rise to the top once the tide turns. And during this bottoming out phase that we're currently in, there are tremendous opportunities in those sectors. So, in the gold sector, we are very excited about a number of names where we continue to be extremely bullish. We also are very excited in the copper area. And there's a number of jurisdictions that we feel very strongly about right now. So those are the areas where we're spending a lot of our time doing our research and continuing to add to positions in those sectors.
Okay, and Pat, can you talk to me about the importance of grade and size of deposit? I think ideally discoveries are both large in scale and ultra high grade, but that's not always the case. So, where does your focus lie?
Yeah, we really focus our firm on the highest grade, because grade, essentially in markets like today, the assets that will survive, that can survive in an environment where, like I said, I don't know where the bottom is, if gold can fall another 100 or 200 or $300, but the assets that survive are essentially the ones with the highest grade, and we're talking 5-6 grams plus, the lowest quartile costs, top quality management, and basically what I would consider world-class assets. So we have size of asset potential of 5 million plus ounces with superb grade, lowest cost quartile, and basically lowest capital cost quartile. And if your investment philosophy is based on those characteristics, when the market does turn, and it will turn at one point, those are the quality stocks that will have essentially the most spectacular returns. So it doesn't really matter in this time frame when you're buying them, as long as you're buying those assets that already demonstrate tremendous value, the returns will be there. So that's again where we really try to focus our investment dollars, and really where we try to dedicate our time to finding those types of market opportunities.
Pat, you've mentioned the importance of grade, size of deposit, and a host of other factors, including management and jurisdiction. Are there any particular companies that interest you right now over at Power One and fit under all of these categories?
There are a couple that highlight all the parameters that we've alluded to in this interview today. Particularly, what comes to top of mind is Continental Gold, that's run by Ari Sussman, who's an exceptional CEO. It's an asset that's in the right jurisdiction in Colombia. It demonstrates the qualities of being a world-class resource that has grown by the drill bit. It has an exceptional senior management team from a geological and a technical and an operating perspective. And it has a great capital structure. It's fully funded with $140 million in the treasury, and it's continuing to aggressively drill its Buritica deposit. So we feel very good about Continental Gold. The other one that comes to mind is Dalradian Resources, which is run by Patrick Anderson, who was formerly the CEO of Aurelian Resources. And Dalradian is, again, in a jurisdiction we like, in Ireland. It's a deposit that is growing. It's a multi-million ounce gold deposit with grade, and continues to grow by the drill bit. And it's got a good share structure with the right institutional investors, and a good following on Bay Street with a number of research analysts. And these two companies, there's a slew of others that we're involved in, but these two highlight many of the qualities that we've discussed today. And we feel that with a stabilizing gold price and following an increase in gold price, they will benefit from the coming cycle in the commodity game.
And one final question for you. I don't want you to make any type of time predictions, but do you see a bubble phase coming up in the precious metals and resource sector, or is this just yet another cyclical move for the resource sector?
Well, we are in a cyclical market. So, to make a prediction of a bubble, I mean, I'm very highly confident that the price of gold will be significantly higher than where we are today. But again, with our investment philosophy and where we try to allocate our capital, a stabilized gold market, anywhere above $1,500, there will be spectacular returns once stability comes into the gold price and we see some upward movement. Again, the highest quartile companies with the highest grade, lowest cost capital, lowest quartile operating costs, quality management, and the right capital structure that is funded, those are the assets that you want to own. Those are the companies you want to invest in. And those are the ones that will have the spectacular share price appreciations once this gold market returns to some form of normalcy. And those are essentially the assets that we like to have.
Pat, thanks so much for taking the time out of your busy schedule to talk with us today.
No problem, Colin. I really appreciate the time.